All right, everybody, good afternoon. This is Christian from Hertz Tribeca Trade Group with your end of day recap for Tuesday the 13th. And you could see, I always start with the S&P chart and kind of look at a couple other areas of the market that I think are interesting. And, we've got a little bit of continuation here, up 30 basis points today. So you can see 3 green bars in a row. So it's a slow bit of progress, but it's definitely moving in the right way. I really shouldn't say slow, but obviously everybody wants a V recovery. Who knows? Do we get that? I think that it's way too early to tell, but things are gradually getting better from that move from the 200-day moving average. My complaint yesterday was that we were not above, the price was not above the yellow line, which is the 5-period exponential moving average, which has been a great proxy for the trend that we've seen up and down. So we're above that. Really, the Nasdaq has been showing some strength here. The Nasdaq was up, and basically since Friday, the Nasdaq has been showing the strength. Outperformed up 0.5%, so pretty nice price action there. Small caps. You could see, I think small caps were right around what the SPY did today. Probably the lagging, I would say, a little bit here. Only up 20 basis points. Still above the 200-day moving average and making progress. So, I think you just have to be patient and kind of let this market play out. Are there some things that don't look great? So I would say, so first of all, the VIX, before I go to those areas, I always like to go to the negative first and then talk about the positive in case you haven't figured that out yet. But the VIX was down 2.5%. Again, it seems to be, kind of in the morning, a little bit jumpy, I would say. First bar of the day, and we kind of rallied into, remember, we started the day down about 0.5%, so we made some progress from the lows. A lot of that, why we kind of started the day lower was because Asia did not finish on the high, did not finish close to the highs. Actually, Japan gave back all the gains and finished in the red. And then Europe remains to be a trouble spot. So, again, VIX progress, if you go back to this, from where we were this morning, it just kind of trailed off the whole day. Weird green bar here at the end, close to the end of the day, but you could see we haven't taken out the low from where we were, what was this, earlier in the week. But we're getting pretty close. I think we duck under 25. That's progress. We keep going towards the 20 handle. It's going to start to look better and better, right? So again, looking at the VIX here, which is still, I think, a must-watch until the contango markets return, where they're not pricing in so much fear in the short term. I think the VIX is a must-watch, and as long as it's above, 20 right now, until it gets back below 20, I think for the time being you have to keep an eye on this thing from what we saw last week. Unfortunately, trust me, the VIX is not something that I care to look at every day, but it's just what the situation is right now. So I would say one of the trouble areas is Europe. I mean, Europe closed on the lows again today, so you could see in local terms, and you may not want to look at this in local terms because it looks darn ugly. This is the Euro stocks, cut through the 200-day moving average, and keep in mind they finally started to make some improvement and looked pretty good. But if you really want, you can look at this in terms of U.S. terms to make you feel a little bit better. But it's still through the 200-day moving average. So if you trade things like EWG or EWU, all that is adjusted in terms of currency. So you're long you're long. That's the UK, which bounced on the 200-day moving as well. What I'm looking for is EZU, which is European stocks, and tracks closely. So, when you factor in the currency move, I would keep an eye on the EZU, see if it holds the 200-day moving average. You could cheat and use that and say, hey, as long as it's above the 200-day moving average, it looks okay. So I think that's one of the trouble spots. And then, corporate bonds are also one of the trouble spots. Just keep in mind, you're never going to have a perfect market where everything is going to line up so that it's crystal clear. Generally from my experience, there's always one or two things that are worrisome or troublesome. You just don't want to see this thing break down. LQD actually, which is investment grade bonds, which was really, I think, unusual to see this break down from 120 down to 115, 117. We have seen moves like this in the past. And things have been okay. So you just kind of have to keep an eye on it, and if it really starts to go further down, then I would say, hey, maybe we've got an issue on our hands. But for the time being, I mean, you could actually draw a trend line here, and it would probably hold up. Maybe it's a little bit below the trend line. Again, something to keep an eye on. I think the move in bonds, the 10-year looks like. We'll just bring up bonds because, again, that is an area that's on everybody's watch list right now as well. We'll go to U.S. here. Let me just takes a second to bring this up here. The 10-year finished at down a little bit, down to 282. So it's been staying around this 280, 285 level, and the 30-year a little bit down to just a few ticks down to 311. TLT was down 0.5%. TLT was up 0.5%. So interesting, some of the moves that we saw today going into, and again, some of these things, it kind of pains me to talk about, but everybody seems to be focused on the CPI report tomorrow. I mean, I think people are really making a mountain out of a molehill. I think they're just overdoing it with this. I mean, even if you go back to the Friday before of the jobs report, which is also one of the catalysts for volatility to pick up, in my opinion. I mean, it was a tick higher than expectations. So, I mean, we'll see how it comes in tomorrow. We'll see how retail sales come out. But for now, it seems like really a big overreaction. I mean, unless this thing comes in and it doubles the CPI, then there's maybe some cause for concerns. But if this thing comes in 0.4% versus 0.3%, I hope everybody just kind of chills out a little bit and goes on with their lives if it shows an uptick of 0.1%. If it happens to move lower, then I think things, we'll see things could get really interesting. And we saw some positioning for that. Some areas of the market which have really gotten beaten up. REITs, VNQ. We saw some call buying in this today. A lot of these areas are, REITs and utilities are down below the 200-day moving average, but maybe somebody is thinking that they're way oversold. So we did see a call buyer in VNQ. Actually, a couple different trades that went up. This is just like IYR. If you're not familiar with VNQ, it's just like the ETF IYR. This is just a Vanguard product, but they were buying some March 77 calls. They also bought February calls. Maybe they're also hedging, so you don't really know. There was also an interesting trade that went up in utilities. Looks like there was calls bought and puts sold. March 51 calls looked like they were possibly being purchased, and the puts look like they were being sold. So XLU has been another area that has just gotten really beaten up. But perhaps somebody thinking if the report comes in a little bit less than expectations, maybe TLT, maybe bonds really rally a little bit, and yields go down, and then utilities and REITs become more compelling or more interesting. So we'll see. Those are just some things to think about for tomorrow, because I know everybody they keep talking about the report, the CPI report. Again, I've been trading for a long time, and I know when somebody says that, it doesn't mean that all that much. But since I've been trading and since I've been a financial advisor, back before 2000, and worked on an institutional trading desk for a long time at Merrill Lynch, I've never seen so much emphasis on a CPI report. So we'll see. Maybe they know something. Maybe somebody's onto something, and that's why everybody's so focused on it. We'll have to see. We'll have to wait till tomorrow at 8:30 in the morning. We'll be going over that in the trading room and talking about and watching the moves, obviously, in bonds and in gold. pre-market as well as in equity futures. So besides that, for today's market action, sorry to spend so much time on that. I've already gone through about almost 10 minutes, but really what's been interesting is the Chinese internets to the upside. Like I said, I always get through the bad stuff first, and then we could talk about the good stuff. Look at the Chinese internets. This has been one of the hottest areas of 2017. When I say hottest, it was one of the best performers. For the year, KWEB. If I could just bring up the stats here, 1 year up 51%, and that's even after a nice haircut from what we've seen from the highs. But I think just pretty good results so far for a couple names that are in this ETF. It's VIPS, WB, Weibo. Really rallied pretty hard today. So and then Baidu looks like it's up as well after hours on earnings as well. So I think this is pretty interesting. You can see WB, VIPS, Sina was also up 6%. We played BABA today in the trading room. That worked out pretty well today. Managed to take some profits and then roll those short-term option contracts out. Still, I think BABA still has work to do. It didn't close on the highs. It did close in value. So again, that's the first close in value that it's seen since all the way back here. So something to keep an eye on. A couple of traders played JD.com as well, which had a real nice day today, up 1.9%. In option activity, Twitter right out of the gate. Really, really nice performance today. They were speaking with a number of other tech names, but up 8%, up 2.5%. So I'm still long this name. I think I'm up 66% since I originally put this trade on. I did take half off a little bit for profits after the earnings gap, but I'm still holding the balance, so looking pretty good on that one. Tesla, we saw a little bit of calls in this one as well. And then some really blocky trades have been coming up. How this has really been working recently is the first hour of the day this week, and maybe a little bit towards the end of last week too, has been very quiet. And then in the afternoon, once things kind of settle in for the day, we start to see call buying, right before lunchtime, and then maybe the hour after, right around like 1 o'clock, we start to see the call buying really pick up. So we did see some, and we are seeing a lot of weekly stuff. It is monthly options expiration on Friday, so you have to be aware of some of these prints. But we saw some plays go up in the rails. Yesterday, keep in mind, we saw CSX calls. Today we saw NSC calls, so another rail name. Also some UPS. These are kind of, I refer to them as lottos. They were playing headlines about UPS. So we saw a little bit of those. OLN, we saw some calls in this one. Weekly calls in IGT. And then here's when we get to the more blocky, interesting names. Disney. Big block of Disney calls. I actually tried playing some weekly calls today in Disney, and I almost got out of those for a full-on double. So that was pretty good. This name, we just haven't seen a lot of action in this name. It's still below the 200-day moving average, still challenged, I think. But they went in. Here, I'll show you the exact prints so you can see how they went up. But they went after the July calls twice. And then, which is typical, sometimes they start to go after the momentum things. So we saw the Disney July 110 calls go up twice, and then you see some March 115 calls go up as well, some February 105 calls going up as well. So some repeat action after those first two blocks. So I think that was a pretty good signal for a day trade. And then, just trading like I think makes a lot of sense. You put on a trade, it works for you. You take some of those profits and you roll out to another trade and see if it's got some momentum in the next couple days or possibly weeks with a July position. KMX saw some calls, big block in FTC. I did also take this trade. Again, going all the way out to July. This name just reported earnings. Had okay numbers, decent numbers, but the name got sold off afterwards. QD, another Chinese internet name. I actually like this chart a lot. I think it's setting up. It's a newer name. It's a new IPO name. It was a $35 stock, then went all the way down to 30, and it's been basing here for a while. So it's been basing around the lower teens, and it looks like it's trying to get out of this range. I had bought some shares a little while ago in here. They report. I didn't realize that they reported earnings, and once they ducked below into value, I got out of it. But I might be looking to try again with this name. Also, race, a lot of premium. So again, like I said in the afternoon, some really interesting trades that went up. Look at this race. These were decent sized trades, even though, again, they're being very sneaky. 265 contracts at 125. Look at the amount of the premium. So, it's 180,000, 150,000, 109,000. It looks like somebody really likes race. I took a couple of these contracts, nothing major. Some of this option activity, that's so expensive. I think the chart looks pretty good. That's why I decided to take it. It's above value. I mean, much different charts than we're dealing with. Here was the weakness into 130 and right into support. You got the short-term moving averages and you got the top of value. So I gave this a shot. And again, they're going out, a little bit further. This is the stuff that I like. May, June, July. I don't really care for that weekly momentum stuff, unless you're strictly a day trader and you're just looking to kind of trade back and forth for the day. Then there was also towards the end of the day some Alcoa shorter dated stuff. Scalp is the word that I was looking for. Unless you're just a scalper and just looking for, not to really hold positions overnight, you're getting those opportunities too. Alcoa and Steel Dynamics. So again, makes me think like a lot of names that are going to be really sensitive with economics that are coming out tomorrow. But who knows? Maybe they're buying Alcoa weekly calls for some other reason. I thought the STLD, while it's way out of the money, I think they bought these for about 40 cents. What is it, 50 strike, which is above here. These have worked before, and once, STLD, we saw a lot of calls being purchased all the way back here, and this worked from 38 bucks to 46. So normally I would say, wow, that 50 bucks is too far away, but after seeing what STLD did before, notice that it is into the 50-day moving average. Keep in mind, a lot of these trades, you could pick, you don't have to follow exactly what's on the tape. If you like the trade and if you like the support of the 50-day moving average, you trade it in your own system. All of these trades that I typically look at are just ideas. I think some people really get focused into that they have to follow exactly what is on the tape. I think that's bullshit. I don't think you have to do that at all. I think it's just trade ideas, and then it's up to yourself to kind of go in and manage the trade in your own trading system. That's my thought, and that's my system, which is done very well. Just following option activity, I think is not the way that you generally make money and end game, but that's my opinion. So anyway, just a good amount of trades. I would say the last thing before I end the video is it's probably, if you kind of go back and look at the previous days, I would say a definite pickup in option activity. Maybe the fact that the VIX is starting to fall a little bit and the indices are gaining a little bit of a footing here is compelling a little bit more risk taking. So I think an overall good sign for the day. All right, guys, thanks for watching and have a great evening. See you bright and early tomorrow in the trading room. Thanks very much.